morning, good afternoon, good evening, everyone from wherever you've joined, depending on the region. On behalf of India Factoring and Finance Solutions, I welcome you all to today's chat show. And we've got an amazing speaker, guest who's going to be joining us soon. So, before we get to that and give an introduction about him, I would like to briefly give an introduction about India Factoring. India Factoring basically is a premier trade finance institution registered with RBI as an AD3 authorized dealer 3 category in 2009, and it holds an NBFC factor license. Our flagship product offering is the non-recourse product, which helps clients avail factoring without the facility appearing as a liability in their balance sheet. Such niche structured trade finance products from India Factoring offer ease and flexibility in managing working capital requirements of businesses by funding an agreed percentage of invoices soon after shipment of goods or after services have been rendered. We are world ranked number 7 in export factoring, and in India, we are number 1 since 2018 in the two factor model. Now I would like to welcome our guest for the day, Mr. Pankaj Mundra. So Pankaj Mundra is a renowned chartered accountant with a postgraduate in management with 21 plus years of industry experience in the fields of strategy, fundraising, trade finance, debt syndication, restructuring, investment advisory in the Middle East and Asia region. He has exposure in working with financial institutions like ICICI Bank, Standard Chartered Bank, ABN AMRO Bank, and Mashreq Bank. He co-founded a boutique trade finance advisory firm, Nimai Management Consultant, and is also co-founder and chairman of 360 TF, a platform whose core aim is to connect exporters and importers with banks across the globe to make the best trade finance deals happen. He has been the finalist for Regus Business Leader of the Year in 2013. He's also been awarded as the champion consultant at the SME World Summit in 2014. Furthermore, Mr. Pankaj has served as the ICAI Dubai chapter chairman in 2016-17 and served as the deputy chairman for the ITFM MENA committee in 2017 and 18. So, without further ado, I would like to welcome Mr. Pankaj with us. Welcome, sir.
Thanks, Neil. Thank you so much. And happy morning and happy afternoon, everyone on the call and the chat show. Thank you so much.
I think we'll just straight away get into it. So you've had more than 2 decades of experience in the finance industry, and so you can just give your views on it and what led you to start 360T.
Finance is very dear to me, Neil. I remember when I was probably 12-year-old in 1998, where I got my first exposure to finance. When I started with my mama, a small a comic shop where I started doing renting and selling those comics. And that's where I learned that take your rent in advance, which is you're renting the comic for a day, and the deposit for the comic, which was that time 4 rupees Manoj comics and 5 rupees Diamond comics, the Chacha Chaudhary and Sabu. Because we had instance where somebody who came from holiday to the town where I was based in, he took our comics and ran away during in summer holidays. That's taught us the lesson. So I learned my finance lesson early in 1998. But yeah, it has been an interesting journey. I've been, of course, 2 decade of experience. But I started my trade finance journey in 2007 with my employer Mashreq Bank, and that's why I learned trade finance. And I saw the gap in with my exposure that there was a lot of lack of trust between the buyer and the seller, especially in cross border. See, when you're selling from Kanyakumari to Kashmir, you can still trust probably a buyer being you there in the same country. The moment you do a cross border transaction between India, Bangladesh, or India, UAE, or India, Kenya, or India, US, there's a lack of trust, and that's where the trade finance industry plays its role. We started, as you of course shared, that our journey of trade finance in 2009 as a boutique trade finance advisory firm. Now, being a part of ITFA, which is International Trade and Forfeiting Association, of course, I was the vice chairman for ITFA for MENA region. Interestingly, I joined ITFA. I can tell you the reason is your group company in London Forfeiting, because I met the team of FimBank and London Forfeiting, Simon and Lorna, in Malta in 2013. That's where your head office is, right? And that, of course, give us the exposure to your group company as well as exposure to ITFA. So I joined ITFA in 2013, and in 2017, when they hosted their annual meet in Scotland, I got a first time exposure to fintech and trade fintech specific to say in 2017, 6 years back. And after that conference, that was the sort of a calling for me that we also need to create something where we'll be doing traditionally this trade finance advisory to move to a digital avatar. And the thought which occurred was, can we make a Uber of trade finance? Yeah. And that's how the 360 TF business idea was born. And then, of course, with the help of my partner, with the grace of God, we started working on it. I have my other co-founder and CEO partner Vikram. He's also there on the call today, listening to us. We came together along with my holding company partners, and we started working on this idea. 360 TF as a platform went live on 23rd May 2021, and as we speak, in within 5 days, we'll be celebrating our second anniversary. So from comics to trade finance and to 360 TF.
So I'll be the first one to congratulate in advance for your anniversary coming soon. So just coming to the next point. So I think in the last 3 years we've seen the global economy and the geopolitical situation around the world has been ever changing. Like there was COVID-19 conflicts in Europe. You know now more than ever it has become critically important for all the stakeholders involved in the global trade finance to be very careful about how they want to set up a sustainable supply chain finance for them. So, briefly, if you could explain where do you see the global economy today, and what do you see is the impact of the global finance receivable industry in after in the because of the last 3 years.
Sure. So I learned this early in the day, Neil, that especially for trade finance industry, any crisis is opportunity. I started my career with traditional finance, which is letter of credit, and then of course we are now focusing on supply chain along with letter of credit. And I learned this first in from my boss. His name was Majid Hussain, working in Mashreq Bank as he was head of FI, and he's ex American Express. That any opportunity, any problem, any war is open, because the moment war happened or any conflict happened, the cost of letter of credit confirmation, discounting, or for that matter, supply chain finance goes up, right? So
Correct.
from that perspective, not that we want or we wish any crisis in any country or in the world, but yes, this has led to and we have seen that from a yes, the crisis has led to a shortage of dollars in emerging markets, be it Bangladesh, Sri Lanka, or Kenya. We have seen first time shortage in dollar in most of these countries. The currency has been devalued. Yeah. Having said that, definitely there's an opportunity, one, because the shifting of supply chain we have seen. I know a client who have got order now from a large leather manufacturing company which was earlier in China, which has moved to India, to Kanpur. Yeah. So because of this change in supply chain, we all see as a trade finance industry and trade finance expert that opportunity to capture that market. We have seen pricing going up on the risk of various countries on letter of credit, and same as in the case of supply chain. So to put it in a nutshell, yes, we are seeing impact of the whether it's the Russia-Ukraine crisis or increase in SFR because what led post-COVID and so on and so forth. But I think at the end, whatever crisis and whatever pricing goes up, whether it's a risk management or all, it has been passed on to the consumer, of course, which lead to a increase in inflation. But again, coming back to this, there's a good opportunity for trade finance industry, and especially for a factoring company like yourself, which is seventh world, number 7, and number 1 in India. There's a definitely opportunity for Indian exporters because export is going up, and I'm sure there's a good opportunity for India factors and a platform like 360 TF.
Definitely, like I would just agree to you that because of the China plus one strategy that is being implemented globally, a lot of Indian manufacturers we've seen that have got the benefit of that, got orders from China, and they're taking advantage of it going ahead. So I think definitely it's been beneficial for Indian manufacturers. Recently you attended the annual meet for Bankers Associations for Finance and Trade and the IFA conferences in USA. So if you could quickly just describe what were your key takeaways from that for the Indian factoring ecosystem, like what do you think will be the future?
Sure. Yeah. So BAFT, as the Association for Finance and Trade, which is one of the oldest I will say Trade Finance Banking Association goes back to 102 years old association, started by American. It is part of American Banking Association (ABA). So they are the the leading organization for lobbying on the trade finance reforms, innovation, regulations, and so on and so forth. So uh, it was very interesting. Even BAFT have evolved where they used to discuss only letter of credit. Now they're discussing supply chain. Yeah. In fact, now the chairman of the BAFT is a person from BNP Paribas, who's the head of transaction banking and supply chain. In fact, he happens to be an Indian, Suresh Subramaniam. So yeah, there was a lot of interesting discussion which is happening around. The key thing was being discussed about the interesting about the in the BAFT was the cyber security, the cyber crime, the innovation which is happening, and are we up to date with the innovation, and of course the talent being trained under this, because as we know that very few bankers be there in trade finance and factoring industry. They go to corporate banking or retail and so on. So this was the key areas of topic of discussion on the BAFT, and of course they're doing a lot of new things on the supply chain side. But IFA was equally important as it's an international factoring association, right? And they've got more than 1,000 members across the globe. The key takeaway from a perspective of the India factoring ecosystem is the IFA, the 80% of the members, maybe 90% of the members are from US. And US has got a very solid UCC law to protect the right of the factoring and the lending entities. And what does the law says, just to put it in a very simple perspective, that if you're doing a with recourse discounting, and if you have a customer willing to pay and he's okay with it because discounting, in that case, in case if a buyer default, and in that case, of course, the factoring company is supposed to recover that money from the supplier, right? Which is your customer. And even if he default on it, or let's say, God forbid, he go for bankruptcy, as per US law, the factoring company have right to have a charge on the assets of the corporate as well as charge on the director assets. So they have a charge to the assets of the promoter as well as the company, which is not probably there in black and white in case of India and other markets. So that's give a lot of protection to the factoring company in US. And another interesting thing, which is good for factoring company and the if the corporates on the this called know that the average interest rate or discounting rate or factoring fee all put together, you call it, is between 12 to 18%. That to the most mature market. The fundamental is that if you're making a margin of 5%, yeah, I'm charging you 1% per month if it's 12% per annum. So out of your margin of 5%, I'm charging you 1% so that you can use this money to produce more goods and supply more goods, and the increase the rotation of your capital. So they come as a more of a business partner than a classic money lender, and this we get easily. So the good news is that where I see that we discuss the pricing of 6 to 10%, and that's why sometimes customers say, "Oh, it's high," but even a mature market like US, the pricing is in double digit.
I think that is something that people don't really aware of. That then usually people assume because it's US, it's a mature market. This is how it works. So just adding on to something you said, what we pitch the clients is don't go for recourse in India. Just go for the non-recourse. I just like to highlight India Factoring is one of the first institutions who's pitched non-recourse domestic factoring to companies in India. So I think a lot of them, if you're listening on the call, they can definitely take advantage of that.
In
Just
fact,
going
just one add-on, Neil, I'm aware of course, we met recently your CEO, Ravi Valicha and Lakshmi Narayan, your products. We've been interacting with them and we've been working with them. And I know that India Factor is doing with recourse. And yes, there's a product which is available on the without recourse. But the idea of to share that from a regulation perspective, if you or anybody wanted to do, that sort of a regulation is available. And I think if we have to bring those US factoring company which has been doing this business for last 10, 20, 30 years to India, either on mainland or in Gift City, to for their licenses, they will be looking whether the Indian ecosystem is ready with those sort of a regulation, right?
correct.
Yeah.
Yeah, I totally agree to that. So, just moving on, I would just like so in the last decade, so you've seen trade finance evolve. So, like, how have you seen, like, what have the different evolutions you've seen, and where do you think we stand today in terms of global trade and trade finance products available for everyone?
I think if you really see overall that everybody understand letter of credit, but supply chain is pretty new, right? From the perspective of if you see the really supply chain have just picked up in last 4 or 5 years, right? And whether it's reverse factoring or inverse discounting or receivable, it was not been commonly known to the exporters. If you see, exporters from, say, from Coimbatore or Ludhiana or from Rajasthan, where I am from, uh, they are not aware of, and they are sitting on those receivables, right? And we know that most of the case, of course, you do without recourse discounting as India factors, but not many Indian banks do factoring and do without recourse discounting. Now the evolution which has happened is the technology, right? So today, as we are partnering with you or we're partnering with various banks globally, at the speed which help you to achieve what you want to achieve with the help of technology. Now we as a firm, as we just celebrate our second anniversary, we have onboarded 1100 corporate customers from 25 countries. Our 90% of our team members are sitting in India, based out of Jaipur. I have my colleague Lokesh, who heads our corporate sales, and a team of 20 members under him. We have a state-wise team which keeps traveling every month. So by using technology, we are able to do KYC, we're able to reach these customers, and literally we're onboarding 2 customers per day. Yeah. And what volume which we as a firm traditionally, when we started in 2009, in 10 years, where we saw a volume of $6 billion in 10 years time, we've seen this volume in less than 24 months. As we speak today, till today morning, we have a volume of $5.7 billion. So with technology, your accessibility to the customers become easier. For a customer accessing India Factors or 360F or any other institution become easier, even sitting in a non-district, a small town in India, right? So earlier, otherwise, you have to do a road show, go to Bombay, meet the bankers, go to Delhi, meet the bankers. But today, by using technology, you can, from a small town in India, as where you're exporting from, you have access to this technology. So I think technology have made easy the reach, the speed, and of course, from the KYC perspective, which make life easier for the lender.
To a certain extent, I agree with you. But in terms of India, the way we said, like the way we discussed, somewhere in the south or the north, people are not yet aware about factoring as a product in general. So, how do you think that can change? Like, how do you think more exporters and more SME clients who are like the backbone basically of the industry, like in India, the economy in India, how would they understand that okay, you should take benefits of this technology?
Probably, India Factor and 360TF has to do this chat show every week, so so I think, yes, you are right. We've been traveling to all the districts and the states. In fact, my colleague Vinita, she heads our strategic alliances. We literally been going every alternate week to a district and to the town. And I agree with you that there's no awareness. So I think that awareness will only come with these talk show, these seminars, and so on and so forth, by reaching the huge India, with the exporters which we have. And I think it's a learning curve. But I think the digital, like, maybe this, yeah, our chat show is live on, Facebook or YouTube. I think this is where you can make the Indian exporter aware of this. There's product like a company like India Factor exists, or a product like without recourses. It is just share the knowledge. We have to keep doing at a government level, state level, district level, factoring company level, platform levels, to bring that awareness, education by chat show, these seminars, and creating that literature and all this social media platform.
I think that is exactly what we're trying to do out here.
Right.
Yeah. So okay. So there are when you just talk about trade in basically, so there are multiple organizations involved. Okay, we see there are importers, there are exporters, custom officials, logistic partners. There are warehouse regulatory authorities in both the countries. So there's a lot of paperwork again associated with all of them. So what role do you think technology will in general play so that they can alleviate these cumbersome processes and make it easy for global trade in general?
So yes, there are a lot of innovation happening, from, I will say, screening of a customer or exporter, the KYC. He comes on the platform, he places a transaction. When the transaction is there on the platform, whether it's under letter of credit or under factoring, then the documentation start in terms of the invoice, the bill of lading, and the packing list, and so on and so forth. So there is a lot of innovation is being happening. There are a lot of fintech company which we are in talk for partnership. Few we have signed the agreement, few are under pipeline. I met recently a few of these fintech in US. And what the the lesson learned now is that we nobody can do everything on their own. Neither India Factor, neither 360 TF. It's the time to collaborate. So somebody is working on KYC, somebody is working on automating the documentation process, somebody is working on digitizing the invoices. Yeah, there's a form based out of Europe where the whole invoices and everything got digitized so that when it go to a bank, he can literally. There's an initiative called DNI, digital negotiable instrument, taken by ITFA, where the whole process of digitizing is being the digital invoicing will help you to discount that invoice much faster. So there is an innovation happening across the full value chain of trade finance. It's being done by various players, and I think platform like us or yourself, by collaborating with them, could bring in that synergies from the customer. The whole idea is that, yes, how do we save paper, where a lot of paper go through, especially in the transaction and the letter of credit. So how that whole thing get automated, and we as a firm have taken a vision that in next 3 years time we have achieved, want to that can we help exporter get paid in 36 hours,
That's a
and that will
very
well
great.
through minimizing the documentation, automating the documentation, and of course bringing that funding on our platform.
That's a very, very optimistic goal to keep, honestly. And I think that's where we all should be heading, trying to reduce the use of paper as much as we can. So we've just got a question. We'll take it up from Ratish. So, how export factoring with recourse way over export bill discounting based on cost and convenience?
So, if I understood the question correctly, that he's saying that export bill discounting, how export factoring with recourse way over export bill discounting based on cost and convenience. Now, I think export factoring and export bill discounting to that extent is pretty much same. Whether you can call export bill discounting, somebody may call it, if it's arranged by the buyer, it can be called reverse factoring or otherwise. So, the whole idea is that it is post shipment. Now, if you're doing post-shipment export bill discounting, we know that what pricing, or maybe in a single-digit pricing, maybe some of the factoring companies doing in India. But I don't see as a major differentiator when it comes to terminology that export factoring uh, with recourse is different to export bill discounting. Pretty much is a very similar product per se, unless that if it is being arranged by the buyer, then it being called as a reverse factoring. And I think process is pretty much same. Cost, I don't see difference. The difference could be only if it's with and without recourse, right?
Correct. I think the one difference, maybe you can say something out here, maybe that the collection in terms of factoring, even if it's with recourse, would be done by an entity, basically, will be done by the factor, basically. Export bill discounting, I think you still need to go ahead and so if there's suppose there's a time zone gap or a language gap, the exporter still needs to figure out and keep a special team for collection. But in terms of with recourse, I think the factor can do all of that, so they don't have to have that team available for collection. So I think that can be a difference. But otherwise, yeah, that's why we mostly, preferably, it is to go with non-recourse products. Another question just popped up. Sir, is there any minimum export turnover needed for availing the factoring? So I'll surely you can connect with us offline after this on our website or someone, and we can directly answer these questions, Naman. So I hope we were able to answer Ratish's questions front earlier. So I think we just go ahead with the next questions. So okay, so the major volume of exports from India is mostly concentrated to, as you know, to USA and Europe. So you, as you say, you served as a deputy chairperson for the ITFA for the Middle East and North Africa region. So in your experience over there, and you've been a member of ITFA for since last 8 to 9 years, maybe more. So like, what has your experience been, and what are the key takeaways for trade relations with India, with those countries in those regions?
So I think the Indian government and Ministry of Commerce have done a fantastic job in terms of, from the government perspective, creating the ecosystem and upgrading the relationship with the at a government level with all the countries, be it Kenya, be it Bangladesh, or be it US. And we seeing the most of the country, our trade is all time high with every trade partner, whether it's India, UAE, or India US. This year, India US is again all time high trade with a monthly export, if I'm not wrong, is between $5 to $6 billion, right? So we have seen that based on the road shows being done in last 6 to 7 years, from prime minister to ministers and so on and so forth. So there's a good uptake as far the Indian product is concerned. Now, of course, that's again bring the opportunity. The I will say the hidden gem and the black gold lies in Africa. And what we seeing that while of course there's a lot of trade opportunity in the developed market, but of course you are competing with others, and as well the margins are uh, you know not that great versus what you see opportunity in Africa. So being you're exporting to Kenya, Tanzania, Uganda, Nigeria, Ghana, and so on and so forth. Of course, that may trade, some of that trade may happen under letter of credit. But what we see as interesting thing sometimes through our platform and when our team is interacting, that they are at the sales level in these exported in India, they're not accepting and exploring your order. So if I'm getting the order first time from Kenya, I'm not sure whether I should be doing that as Indian exporter, because I'm not aware of that a letter of credit will be discounted. Now there's a bank called Kenya Commercial Bank, which is one of the largest bank of Kenya. But do we as exporter have that access and understanding that if I'm getting LC from DFC Bank Uganda or CRDB Tanzania or Ghana Commercial Bank Ghana, they are a platform, there are banks available to confirm the letter of credit. Or you may do the export under open account. Let's say you get order from Kenya Airlines, maybe India factor may take a risk on a Kenyan Airlines or Ethiopian Airlines, which is a good risk compared to others. So all in all, in that sense, I think the overall trade is going across all the geographies, but where we see opportunity is the key markets in Africa, especially in East and West Africa.
Correct. So I think another question. Avdut is asking, what is the tag to avail export factoring? Avdut, so this depends from client to client, and there are a lot of factors that go into deciding that. But you can surely approach us offline, and we can discuss it for a particular case, or we can give you a brief understanding about how it would work. So just moving on. So I think, as you said, like US is obviously the number one partner. Around 18% of our trades, exports, imports is with US. Surprisingly, I wouldn't say surprisingly, but UAE is number two with around 7%. So, what do you think if an exporter is looking to expand in the Gulf region? What would you suggest him would be the ideal points to keep in mind? To obtain supply chain finance and obtain better financing in general.
So I know again, I remember when I was talking to your colleague Alan Lakshminarayan other day when we met in Gift City, that even the trade flow with India factors are growing on the India UAE trade as a business. So yes, I'm in UAE for last 19 years, and again the bilateral relationship with India UAE is at its peak, especially in last 60 year again with the relationship, Prime Minister visits and so on and so forth, and the proximity to the country because just a 2.5 hour 3 hours 3 hours flight and very convenient. So yes, there's a lot of opportunity, and we are happy to assist. We have recently got an inquiry from a customer in South India who want to explore to connect with the supermarket in way. So while we have vision to upgrade our platform and also help the exporter identify the importer, yeah, we are working on it. But as of now, on a case by case basis, if there's exporter who have, let's say, exporting spices, yeah, or exporting onions or vegetables or anything, and he's looking to get access to a supermarket. US got a 30 plus credible supermarkets, yeah, like your big bazaar in India. So we are happy to connect because all our fraternity people, the chartered accountants, are the CFO with these supermarkets. So from an opportunity perspective, yes, we have a good market, a good credible buyer. What you need to take a flight, come here, and connect with these guys. And we as a firm is happy to connect anybody who want to explore a new buyer in UAE. Even if you already have an order and if you want to do some credit check, have you heard of this company? Are they good paymaster? Even at an India factory, we're happy to assist on that. A credit check of any buyer in UAE, because we are here, we have a lot of colleagues here, and we are here for the last 19 years. Also as you know that I was the chairman of Institute of Chartered Accountant of India, so we have 3,000 active chartered accountant here, so we can just pick up a phone and do a due diligence of any prospective importer.
Definitely, that's very beneficial for a lot of viewers listening, most probably. So, what do you think about the trade? So, again, like trying to dig a little deeper, like the trade relations between India and Middle East is not that at the same level that you're looking at India and Europe, or maybe India and USA. So, I think, do you see it reaching that level in the future, or always it's going? India's relation is always going to be dominated with US and Europe?
No, see, you need to understand, Neil, that it is also population which drive the consumption. See, UAE has got a floating population, and if you have to take a percentage of the UAE population versus US, we are hardly anything, right? So from the perspective of, I will appreciate if you have to do a comparable when you mention about 18% US and 7% UAE. But if you do a comparison from the GDP of US and GDP of UAE and the population of US and population, this thing, I will say per person or per capita import from a UAE perspective or UAE population's perspective from India is much higher than US. So the our population of, let's say, a 10 million population versus a US population, if I were to do a per capita import from India in UAE and per capita import in US, we are much higher. Yeah. So having said that, I don't think that we can imagine of surpassing in the sense, because unless something goes wrong where UAE want to take over in terms of the trade, but it will be always US will be high because US has got the population, they've got the consumption, right? So if you see, because the relationship and the another thing is, not only so US is also number one in the Indian diaspora, right? Even from a
Yeah.
diaspora NRI perspective, US is number one. There's still someone there who's looking for a the orange from Nagpur, or a masala from Rajasthan, probably, right? So do you have that consumption, which also lead to this the demand in that market?
That's a very unique way to look at it. It's a very different way, but yeah, it make to a certain
I
extent.
tell you, there is a company in India making a ready mix masala for the students studying in US, where you buy this masala from India and go and make a paneer ka or whatever ex vegetable ready to mix thing. So you have that huge consumption from our own diaspora, which can always go up, yeah. Versus, so I think that will always have the leading, and that's why a lot of other players apart from financing industry go and travel to that market, because you have a large NRI market. So, and from both perspectives, individual consumption and even a CFO of a large company who have a buying capacity is an Indian chartered accountant. So you can influence that through using that connect. He can maybe supply this product to you because the CFO again sitting as an Indian CFO.
Correct. So, when you're talking about technology, so do you think there are any particular industries which will be able to take advantage of this technological boom that is going on? So, will it be concentrated to certain industries, or everyone will get the benefit of it?
I think if you really see, most of the industries have already seen the benefit, right? If you see the unicorns, so you have a transportation logistic, we have seen Uber and Ola, we have seen hospitality, we have seen Oyo, we've seen education, we have seen Bejus and the stones to milestones. So there, if you, I think every industry is getting benefited, right? Cosmetics, I mean, I can take various names, but I think we have seen the technology evolution in every sector. We can list down probably 20 sector. Of course, the fintech and the retail tax are of course being leading, because again, fintech because of the volume of the transaction, retail because of the consumer. But I think if you see, every industry have seen the technology enhancement and the upgrades and the startup coming in. Yeah. So and I think it depend on what you need to see. One thing which drives that is the which we call the total addressable market. So you one need to see from the perspective, is there any industry which have not seen much of a technology, but still there's a big total addressable market. And then one of course could see there could be gap in that particular industry. But I'm sure somebody listening here or somebody sitting here must be working on some startup ideas which we will see in next few months or years to come.
Definitely. So we discussed at the beginning a little bit about China plus one, and the orders coming to India. So how do you how do you think that Indian exporters can take advantage of that? Like, what advantage do you think they should keep in mind while, when you're getting those orders, it shouldn't be their one-time orders, and they might go back in the future. So, what do you think they need to make sure that they remain in it with us?
So I will share with you. I was with the Indian consulate in New York just 10 days back. Yeah, my team, my colleague Himakshi, she set up that meeting, and I was there in the Indian consulate to meet. And interestingly, and in fact, I could see, our Indian product from Jaipur, from Coimbatore, sitting there in the, In fact, I got to know that, cumin's jeera, there was a product there. The second highest exporter is place called Jalore in Rajasthan, and that product was there. Yeah. Now, what feedback which came from the trade counselor over there, and we were discussing this, is the marketing, the branding, and the packaging.
Okay.
So where we have to improve, and this was coming from directly from the consulate from New York, and we were sitting in the conference room, and few of the products, which is the one district and one product ODTP. I'm sure you take the initiative which Indian government have taken, and there is like our product is fantastic, but where we like is the branding, the marketing, and the packaging. And packaging become very important. How you display product, how you this. So that's where I think we need to catch up. So when we talked about the opportunity, I think if you want to cover up that or cannibalize that or capture that market, whether it's from China or any other country where we have to compete, my feedback to the exporter will be that are you working on marketing, packaging, and the branding of your product from a US or any UA standards.
Correct. That's something I think if some manufacturers, exporters have logged in, I think they can take advantage of this, fresh knowledge, first-hand knowledge that you're sharing directly. So,
And in fact, I would just want to add up this
yeah,
point when you talked about the innovation and the technology. In fact, I was thinking there's an opportunity for an Indian entrepreneur or somebody who want to start. Do you have a startup to help this exporter to helping in branding and packaging and marketing? I think this is definitely a gap which one needs to look into, that whether can a technology help, where technology tell you that if this is your packaging or if this is your marketing or this is your brochure, how well is fit to the US standard, maybe 60%, 70%, and then technology gives you feedback. You need to further upgrade your template or a brochure to upgrade this from a US standard perspective.
really insightful. So we've got a question here from Akash. So Akash is asking, first of all, thank you for your question, Akash. He's asking, we keep hearing about new technologies like AI, cloud computing, blockchain, big names. What kind of an impact do you think these technologies will have in the trade finance?
So very important question, Akash. Again, you touched upon the BEFT conference and the IFA conference, Neil, earlier. The most another hot topic which was there in both the conference was AI, artificial intelligence, and I definitely see AI will play a big role in enabling trade finance. And I must give you this as a one example, as we're building a technology where our technology team have my colleague Abhishek, who's our head of engineering, working on this. That technology should tell that this exporter is exporting this product for last 5 years to respective buyers, and the rejection percentage by this buyer is less than 5%, 5 to 10%, 10 to 15%. AI will tell you your risk management, Neil, that your loan to value or a loan to discounting will be, should you pay again $100, $95 to the exporter, 90, 85, or 80.
Okay.
Well, you may have one rack rate here, I will do a $90 against 100 or a 90%. But an AI will tell you based on the rejections of last 5 years that how much percentage discounting you should do with the particular exporter. One. Second, the payment. While you may be doing factoring for few bills, you will not able to do 100% bills for any income. You will have a per party exposure and the overall exposure on one client, $5 million, $10 million. But he may have export of $50 million. Could you AI can read out the all his bank statement through OCR, that if he's let's say supplying to Macy's in US or Walmart in US, what is the payment track record for last 5 years? 80% transaction payment came on 90 days. some transaction 92 days, 96 days, 98 days, 100 days. That's again give you that whether if I have to price this transaction, if you're getting payment for last 5 years before you come to me for factoring, right? If it's always on bang on 90 days, that means I should be giving you better pricing on this buyer. But if you're saying that there was a delay of 2 days, 4 days, 8 days, 12 days, 60 days, average in last 5 years or 3 years or 2 years, then your pricing will be higher. And I'm sure the seller will appreciate that pricing, because he will understand, yes, your risk management by using AI have used this. So I think this is going to drive, and I think AI will play a very big role in doing credit assessment of the exporters and the buyers or the importers.
Oh, I think very well explained. I hope that satisfies Akash. I'll just ask something personally following up to that question. So, are we there yet? How long do you think it will take for some, trade finance program of entity to actually reach there and implement, AI for such uses?
So as I told when I started, that if you're looking for payment in 36 hours, a firm like 360 TF is already working on it. Yeah. So when we're saying that we have vision to get exporter payment in 36 hours with a vision to do this in 36 months, and as a 360 as a company, we are working on that technology. And I'm sure a few other will be working that this intelligence will help us to process those payments or those invoices in less than 2 days.
That's a very good tag to keep. Uh, Recently, we've seen multiple Apple stores being open in India. Tim Cook was here, and overall, what do you see the global positioning of India in the world right now? As you see multiple uh, multinationals trying to enter India and trying to set up new manufacturing plants, trying to expand their presence in India. So, where do you see India currently, and what do you see India will be in the next 5 years?
So we are looking for an extraordinary growth, Neil. This is again credit goes to Indian government who are pushing all these MNCs. Keep was if you want to sell this product to my country, please come and manufacture here, right? So this has been that positioning and the persuasion which Indian government is doing with large MNCs that we are not looking only to import these products, but we want to have an overall ecosystem or manufacturing in the country, and that has been uh, is really coming to the reality, and I think that will lead to, as we all know, employment and the growth in the Indian country. So I think this strategy of where is fantastic strategy. If you see, as we started as Make in India as a concept, right, and now it has evolved where if every product which we are importing, and if an Indian government goes to that supplier that why don't you come and manufacture that product over here, right? And you get this XYZ, this thing, subsidies and so on and so forth. It's a win-win for everyone, right? Okay. Only difference will be you and me have to do domestic supply chain for that transaction, not the cross-border. Yeah. But yeah, that's fine. Yeah, these are the good names. So yes, I think it is taking off. We even when I interacted again in these two trips, we have seen some inquiries from factoring companies saying, "Oh, we have this customer looking to." Go to India, do some setup, and of course, when I met the Indian consulate as well. So there's a lot of opportunity, definitely, both on the manufacturing as well as on the supplying side, in the services side. We are also seeing a lot of traction happening on the services side, which of course big in India anyway. But yes, it's we are very very positive, and we're seeing that traction that a lot of companies slowly will keep coming, and it's a very good news for the employment and using the resources in India to earning, which will be getting to the increase in the GDP and the overall the positioning of as a country. And I think we will make it because we have the population. They don't have a choice. If they need this population, they need the young population. They don't have choice but to come and build here. And if you see from a cost perspective, also overall ease of business, the labor cost, the fuel, and all, we are quite reasonable compared to any other market in US and Europe. Yeah.
I think you just touched upon a very important point that exports of merchandise products have definitely increased, but similarly, we've seen a huge uptake of exports of services as well from India. So I think where do you see that heading? Like, do you think there's going to be an expansion in both going ahead?
Definitely, I tell you, I met a lot of my friends, or fraternity people in Boston, in San Francisco, in Texas. And you will surprise people from, again, district level. Of course, they have moved there, but they're doing project for Oracle there, they're doing project for SAP there, but the project is being done through India. So all of them, they will have anything between 50 to 500 people working for them. The customer is in US. So what was happening earlier was, in last 20 years, is likes of Infosys and Wipros and all, where they will be doing a outsourcing of the technology, or likes of Genpact or Capgemini, who will come and set up their shop in India, and you will outsource the accounting and accounting processing and all. That's one. But what another thing which is happening is the ERP implementation for the US customer, for likes of SABs and Oracle and all, and that work implementation actually is done from India. So I'm not sure somebody here from the software industry on this call, but that's a huge opportunity. If we're already doing ERP implementation in India, and SAP is same and Oracle is same and any other ERP, of course, okay, you can of course market that capability in US, and of course your the team, the setup will be what you have in India. You can use and capture some good client in US. So to give a perspective, service industry, the accounting outsourcing, the medical bill processing, and all being happening in India for last 20 years. But this, I saw this as a because I met a couple of guys, ERP implementation and things like that. This is just ERP. There will be a lot of other technology implementation which could be happening, supply chain and all. But that work can be done from India, and that give a boost to an opportunity to service industry.
Very insightful. So, a very basic question, I would say, for someone who's like a an SME, small exporter from India. What are the key things they should be, keeping in mind when they're trying to expand with the global situation right now?
I think they have to important is the cost. So you have to improve your quality, and of course contain or reduce your cost. And so you need to see that how to, if I have to compete, what sort of technology I'm using to reduce my cost, if I can, if I'm into manufacturing, right? So that's important. I think you need to take control of your cost and improve the quality. I think that's the mantra, because if you have to compete on the product, you have to improve the quality. And if you have to be efficient on the overall costing, you need to take care of your costs. Having said that, so that's from the perspective of competition perspective. But again, from the expansion perspective, we already have discussed. The another point is, which I'm sure everybody knows, there are a lot of these road shows being done in every country. So you need to track, for example, you will have an element show in California. Of course we import elements from US, but like this you have a various trade show in each of the state, in US, in UAE, in UK and all, and there are a lot of being done through Indian government, Indian consulate, and the Ministry of Commerce and all. There was a select USA which just got over 3 weeks back, which was in Washington, and that's a big one where all the FDI people come, or from investment perspective, cross US going to India, India going to US and all. I think Dubai, we host Gulf Food every year, and the various big five on the building material and construction side. So I'm sure we've been seeing exporter coming on this conference. But are you part of these these road shows? In fact, recently we did an event with EPC in Ahmedabad. My colleague Mansi and again Benita, our team organized that. And interestingly, good to learn that in EPCs giving you promotion, giving you free ticket, 50% discount on ticket for you to travel with them for a road show. So I don't know whether a lot of exporters know this. The Indian Export Association gives you 100%, sometimes 50% of your travel cost to travel along with them. So I mean, there are a lot of these subsidies which is available in India, which is which if you're part of this respective export association, and we do this quite actively. So we've been part of various these associations doing these conferences, and we happy to help. But yeah, so the exporter need to be aware of that. If government is supporting, am I taking advantage of that?
I think that is something a lot of exporters should take note of that and maybe try to take advantage of that. We've got another comment from Ratish. Request your views on direct factoring, trade credit insurance based factoring, future. Okay, so request your views on direct factoring and trade credit insurance based factoring, future in India.
I think as we all know that the trade credit insurance, which was available, I think, which if I'm not wrong, got stopped after the 2008 and 9 crisis, and of course there was a lot of media communication was going on for last 3 4 weeks. There was an article came also in Times of India that which I think we have already taken that step. But basically, as of now, whether we have enough underwriter in India for a cross-border credit insurance, and also as a lender, as a funder, you're allowed by RBI or a gift city regulator to uh, do a factoring product under insurance, right? So we need to see as a overall ecosystem for the factoring company in India that both the regulators allow you to do funding under trade credit insurance. That's one. Now, having said that, let's say regulator allows you to do that. How many credit insurance underwriters are being part of this? So, do you have enough of the players likes of AIG, likes of Hermes, Kofas having presence in India? Because a lot of time the regulation will not allow you to take a credit insurance outside of India. That means I'm restricted to take a credit insurance with the underwriter who are there. So of course there are some private insurer from India who is doing it, but I still feel government need to work to bring on those underwriter foreign insurance company who left after 2008 and 9. Because see, we need to understand, we can promote the Indian credit insurer, but they may not have exposure of taking a risk of a Jesse Penny, which went for Chapter 11, or Zara, or Mark and Spencers, or Calvin Klein, and so forth. Where the global credit insurance, he's taking insurance on that buyer from 10 exporters, 10 countries. So let's say a 10 countries exporting to Mark and Spencer, and all those 10 countries factoring companies taking that credit insurance from that global insurance. And that sort of exposure no Indian company will have, because Indian insurance company will do take care of Indian export. So that I'm sure the regulators should understand that and should have flexibility to allow also foreign trade insurance to come and do a level play game. So that's important from a trade insurance perspective. Direct factoring, I know India factoring is doing it. I think this again depend on what is your business model, how much risk appetite you have. You want to take risk on your book, or you want to sell down under credit insurance. And I think this depend on the business model of the. I think both have a future. If you have very strong credit risk management, and I met again few factoring company in US, they do without recourse, without credit insurance, but they have in-house credit insurance team. They have this access to these credit report using AI and so on and so forth. They depend on the business model, but both have a extraordinary opportunity in India. You're talking of $720 billion export. Uh, you have maybe one player like India Factor right now in India. So yes, there's a opportunity for banks and other institutions to uh, explore both the options. Yeah. But we don't know. I just want to add in, there may a time will come where a regulator will say, and which is there in certain countries based on the capital requirement, that a regulator will say, you cannot do this business without credit insurance, or they may also say, okay, 50% of business has to be under credit insurance. So it will also depend how the regulation evolve, because of regulation, and this is there in some certain countries, that you have to sell down X percentage, or you have to have a credit insurance. So it will also depend on the regulator. So just to summarize, this is very, very important point, very good question, that whether we have enough underwriter in India to take care of this credit. Do we have enough foreign credit insurance in India, where the government is working to bring in them? I know Gift City is working on that. Two. Third is, of course, that's being the level play. And then, of course, what will be regulator view, that whether you allow to do a direct factoring, or you will put a consideration that it should be covered under credit insurance.
I think that was a very insightful question, and I think you explained it very well. I hope Ratish got his answer. So I think I'll take one last question. I would take. So this is for almost everyone. Just trying to understand and give everyone an idea of why factoring is a better solution for supply chain finance. So just if you could quickly pitch it to someone, that why do you think they should opt for factoring as a product?
So it's very simple. Factoring is generally led by the seller, and supply chain is led by the buyer. Period. Simple. So, for you, the first solution should be the factoring. If you're there in the export in India, you may be lucky enough where you are part of a supply chain program which is led by the buyer, which is the large anchor buyer. So, I think as for the India is concerned, I think we should, of course, look at the factoring as a first opportunity. Yes, if your buyer is a part of a supply chain program with his banker, then of course you get exposed to a supply chain program. Yeah. And this we're talking of cross border, because you may have a
Correct.
supply chain program that is possible locally, because you may, a large Indian corporate may have that facility with the bank, and they can create a supply chain program for the SMEs in India. So this we are talking of cross border. Yeah.
Okay, so I think we'll come to a close to it. So I would first of all like to thank everyone who's joined. Thank you for everyone who asked the questions, and I hope you were able to answer them. Thank you, Pankaj, for joining. It was really insightful, and I hope everyone enjoyed the questions. Any closing remarks from your side?
No, thanks, Neil. Thanks for this wonderful opportunity. I'd like to thank India Factors, Gauri, who reached out to me to, for this opportunity. And Neil, as you did a fantastic role. And I think as India Factor, again, to summarize, yes, you guys are doing great for the overall the ecosystem. And we are at a 360 TF willing, all our team members. We're happy to help, as I mentioned, on any trade check or any leads coming into Africa or or UAE for that matter. Of course, our development office in Jaipur. Any of the listeners or viewers here, they're visiting to Jaipur for holidays or attending a marriage, they're all more than welcome to visit our office in Jaipur. But thank you once again for this opportunity, and we stay in touch.
Thank you. Thank you so much. Uh, So we at India Factory, we have these interactive chat shows very frequently. So I would suggest that all of you all can please join us for the next chat shows. A few questions that we were not able to answer, you can definitely connect with us on our website, or we'll get back to you. Any other people listening in who want to know more about India Factoring, please connect with us, and please join us for the next chat shows. Thank you. Thank you, everyone.